Calculating net present value using MS Excel is presented in this video tutorial. Net present value is a present value of stream of future cash flows from a project minus the project's net investment. The cash flows are discounted at the firm's required rate of return or cost of capital. To evaluate the project and to make a decision whether to accept the project or not, net present value or NPV is used most popularly. When NPV of a project is positive, that means greater than 0, the project is accepted, and if cash flows, that is net present value NPV, is less than 0 or negative, the project is rejected. While evaluating more than one project, mutually independent projects, so you at any point of time you may have a more than one project in hand to make a decision whether to invest in A or B. So in those cases, the project that gives you largest NPV is accepted than the project which gives you less NPV. So to calculate this, I have taken an example of two projects, project A and project B, and their cash flows are presented here. So in a year 0, the net investment of a project A is 2,50,000, and in year 1 it yields revenues of, that is cash flows of 65,000, then year 2 75, 85, 55 and 45,000 are the cash flows. And here we have a discount rate and we need to calculate it. So discount rate, there is a cost of a capital or rate of return. For this project, we assume a discount rate as a 10%. And first, let us say what is the total cash flows. So total cash flows from this project is 3,25,000. These are non-discounted cash flows. So next is we need to calculate the net present value. So net present value is calculated using an equation. Net present value equals to present value of cash flows minus net investment, that is outflows. So for that we have in Excel, we have a function, built-in Excel function, that is NPV, so equals to NPV. So once you get NPV, it is asking you to, prompting you to give the rate, that is the discount rate or your cost of capital. So select your discount rate and comma, asking you to give inputs for value 1, value 2, that is cash inflows. Please remember that it is only cash inflows, not a cash outflow. So we need to select the cash inflows. Please don't assume that the NPV function in Excel will calculate the total equation. No, NPV function in Excel will calculate only the present value of a cash flows, and we need to deduct the net outflows separately. So first we calculate net present value of a cash inflows. Then this, here we are saying that minus net investment. Already we have shown here minus. So what we do is we put a plus symbol here and select the cash outflows, and our project has got a positive cash inflow, or NPV is greater than 443. So according to our decision rule, NPV decision rule, if net present value is greater than 0, then accept the project. So here we can accept the project. Next we look at project B. First we see what is the total cash flows of a project B. So total cash flows of a project B is equals to sum of cash flows. So here the cash flows are 3,40,000, and rather than project A the cash flows are 3,25,000. Generally if you look at this cash flows, we tend to accept project B, that is because of its largest cash flows. But we look at what is the discounted cash flows from this project. So 10% we are assuming the discount rate. Then we calculate the net present value. How we calculate net present value? Net present value using Excel function, that is NPV, equals to NPV open bracket. It is prompting for you to give the rate. So select the discount rate, comma, select the cash flows, that is cash inflows. Select cash inflows, close the bracket, and plus cash outflows. Now this has got a negative cash inflow, that is minus 1172.30. So as NPV is less than 0 or negative, we reject the project. Why this happened? When total cash flows are more than total cash flows of a project A, why its NPV is negative? This is because of a time value of money concept. And if you look at here, in a project in a year 1, it has got a 45,000, 55, 65, 80. But here this project gave you more cash inflows in the initial years, that is 65,000, 75, 85. So amount that we receive in the beginning years will have a more value than the amount that we receive at the end of the project duration. Because of this project has, even though it has got largest number of, that is maximum of cash inflows, but its present value is, net present value is negative.